Okay, sorry, I've been speaking since I didn't know my mic was on mute. So, like I was saying earlier before that happened, this line is called exponential moving averages, and it is the only indicator you'll be permitted to use. So, like I said, how do I use this indicator? How do I put it on my chart? Come to insert, go to indicator, then click on trend. You click on trend and then click on moving average. Now here you can set the period from one to from eight to you can see people use different for you that are already going through the books, you see that a lot of recommendations, another person will tell you they use 200 EME, another person will tell you I only use 15 EME, another person will say I only use 8 EME. Use anyone that is okay with you. Over the time you will know what works for you. So but high has comes to stick with 30 MA. So you can set it from, so just set this place to exponential. Yours will most likely be on simple, set it to exponential, and then all of that. So you can, so once you click OK, it will pop up. Now, one thing I want you to notice is this, and I'm saying this so that you, and I don't mean that you should use this as as a reason to take a trade. You will see that in this downtrend, before market fell, they touched this EMA. Now, see, after this touch here, market came down. 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 So what is this saying to us? Now, if you open a chart, a fresh chart, like we currently have today, if you open a fresh chart like this, and then you put in your 30 EMA, and then your 30 EMA is below the price. So what do I mean by below the price? So what do I mean by below the price? This is the price. This black line is the price because price is currently 1.266, 1.28676. That is the price currently. So if price is above the EMA, this is the EMA, this is price. So if price is above the EMA, then we are in an uptrend. That is the quickest way to know it. But if price is below the EMA, let me look for another chart that price will probably be below the EMA. The price is above the EMA here. Let me look for another chart. Now look at this. Price, this is price. This is EMA. Price is below the EMA. So when price is below the EMA, we are in a downtrend. Now, just for quick and easy sighting, just for you to sight it easily, that's another thing. And then the other thing, the second thing I promised to discuss about trend before we move away from that is that once you notice a trend, nothing stop you from putting a line on it. You know, this line of saying that once you find a girl you love, nothing stop you from putting a ring on it. So once you have a trend that you love, there's nothing stopping you from putting a line on it. So don't forget. I intentionally said that line so that you can remember. I know all of us can relate with relationship, especially boy-girl relationship. So once you have a trend, you can see there's nothing stopping you for putting a line on it. So how do you draw the line? Pick this slant line and drag it from one side of the chart to the other, and there you have it. So let me do it again. I pick the line, drag it from here to here, and I can adjust it after drawing. Can move it up or move it down anywhere, anyhow I want it. So that said, so how do you know if the trend line you drew is right or wrong? Now let me first say that there's no right or wrong. Now what what is actually going to determine if your trend line is right or wrong is if the market obeys your trend line. No matter how right it is, if the market does not obey it, it is wrong. So no matter how wrong it is, if the market obeys it, it's right. So, but then based on what we've seen over the years, to confirm a trend, now once you draw that line, you must be able to notice, to cite at least 2 points that line is going to touch. So with the first two lines, you have a trend. With the third one, you confirm a trend. What do I mean? This is the first point. This is the second point. So with these two lines, I'm sure that I have a trend. This is the third point. So I have confirmed this trend line. But then after that, because it has been confirmed here, we now have another 1, 2, 3. So imagine market was around here when I drew this. That means immediately market touch here, I could sell and make money. It came up again, touch here, I could sell and make money. Now, what is that telling you? If market rises up and touch this line again, you are likely going to sell and make money again. So you are currently learning how the market moves. So that said, so if you don't understand anything, what I've said so far about the trend line, don't worry, we'll still get to all of that later. I'm just a little bit jumping ahead of myself, but I needed to say this so that you have an idea of it when we get to it proper, or maybe when you come across it on in any of those books that you are currently reading. So basically, that is what I need to explain concerning the market structure. Even though I plan to do the second module and the third module tonight, but I don't want to load you with too much of information. So now let me open the ground for questions so that we can interact. And if there's still time and opportunity, we can quickly go to the second module, which is not going to be long. It's just going to talk about what is a peak, what is lot, and all of that. So I'll be waiting for your question now. If you have a question, please kindly ask now. So if you want to talk, raise up your hand, but be sure that you don't have background noise. If you do, I will mute you again. So if you are sure, if you know that your background is noisy, just use the chat box. I'll read it out to everyone else. So and I will answer your question. But if you are sure that your background is very cool and there's no background noise, please raise up your hand and then I will unmute your mic and you can ask your question. So I'm currently waiting for all our questions. And then for the person that chatted me up during the week asking a particular question based on what you read in the book, please drop that question so that I can answer it for everybody. Seems we have a question already. Okay, first let me say it is not trending line, it's called trend line. There's no ing behind it, just for. So why are you saying someone should please ask question? Why can't that someone be you? You also should ask question. So let me answer your question concerning how do you confirm a trend. So now let me use another pet entirely. Let me use this. Let me see if I can use this. So I'm looking for a trend here. Let me go for another one. And then, like, you should also know that it is not every market that will be trendy at the moment you are looking at them. So you could be consolidating. I'm looking for something that will be easy for me to explain for you. Okay, let me see if I can use this. So I said that if you are drawing a trend line, let me delete this and draw it again. You pick the line, you pick it from one angle to the other angle, Now, to confirm your trend line, to even see if you have a trend line or not, we have 1.1, 0.2. So the third point is here. So that confirms this trend line. So you must have a trend line. Your trend line your trend line must pass through at least 2 or 3 points on the chart. Imagine I drew a trend line like this. It's just after this place, it's not touching anything. But I do it like this. At least after this point, it's just crossing over every other place. So your trend line must touch, and then you don't just put it on the body of the candles. It has to be on at the base or at the top of the candles. Now let me show you this one also. Look at this particular trend line I drew here. This is 0.1, this is 0.2. Now what that is saying is, if this market mistakenly come up and touch this place, I'm going to sell it. I'm going to also sell it, because this is even stronger. 0.1, 0.2. If you come here and touch it, I'm almost sure that market is going to fall again. That is what it means. I think I've been able to answer your question. Please let me know if. Yes, you can do it on phone. You can do the trend on phone, but you have to learn how to do it on system first, because you, as a beginner, you must learn to trade on your system first. If you are trying to learn trading on your phone, you are on a very long thing, I must tell you, because the screen of your phone is smaller. You will not see many of the things that you will see on your system, and you will not be able to make accurate judgments. If you have ever seen, in fact, go to Google and then and then and type forex traders or chart trading, you will see that the images you will see are traders with a big screen. So if those are rich traders, if they are still using big screen, I don't know why a beginner trader should be searching for a smaller screen. Now, the bigger your screen, the more you can see the intricate, the most important places in the market. You need to see as much as possible where market has been, where market is going, to be able to interpret every information you have on your chart. And then for the person to say he doesn't understand everything, just cool down and then follow everything one by one. It is very simple. You just have to put your mind to it. It is very simple. Just have to put your mind to it. And then I'm doing something currently. This class is being recorded so that you can go over it again and again and again until you can fully understand. And also, on my YouTube channel, I have other videos I've done earlier before today. So you can go watch all of them to understand what I'm currently saying, or what I'm about to say, or what I've said before. So by you doing all of that, you will understand these things better. If you have any question and you cannot ask me, or you don't want to ask me, or you asked me and you didn't understand my explanation, go on Google. Google is your best teacher. Go on Google, Google it. By the time you combine what I said to what Google said to what you watch on YouTube, you would understand better. And that is very allowed and okay. Okay, so somebody said you saw the word leverage, and then leverage, it was confusing. Okay, leverage should be in our second module. I was supposed to talk about it, but I just want to be sure that I don't get to mix everything up, so that we don't mix everything up tonight. So should I go ahead and explain the, should I go to the next module, which is Forex terminology, that is talking about pips, lots, the pips calculation, how to calculate pips, how to, what is leverage and few other things like that. Should I? Or should we just make it the next class? Okay. Someone says I should go ahead. Anyone supporting that or anyone against that? Going against that. So when we talk about, okay, someone said next class. So the third vote is going to be, okay, we have 2 against 1. So the go ahead have it. So I'm going to go ahead and explain it. So the first thing I'm going to be talking about is pips. So what is pips? So pips is price movement in the market. And it's easier to dictate, to know the pips when you're on your system, because there's a tool on the MT4 interface on the system that help you do that. And I'm going to show you. Look at this plus sign, cross hair. That's what I use. Now, if I want to know how many pips is between where price is currently and my trend line, that is from here to here, I want to know how many pips is here. So I just click on that plus sign, click on where price is, and drag it here. Now, what can you see? You can see 10, you can see 175, you can see 120.342. What is the meaning? 10 is showing something else. I'm going to talk about that later. But that 175, just put a decimal place after the last figure. So it is 70.5. So it means that between where price is currently and where my trend line meets, it's going to be 17.5 pips. That's how to dictate it on the system. Another way is this. If price move from here, from where it's currently, to say that here, how many pips? That's 51.7 pips. So another way to know, to calculate these pips, is that just take the figure where market started, that is 120.173, and then the figure of where price is now currently, that is 119.656, and then deduct them from each other, you are going to get the pips. So let me also answer this. So of what importance is pips to us? In the market, we calculate our profit by pips and lots. So let's say that after our analysis together, we decide that this market will go from here. Let me put a line around it. Is we go from here to here. Let's just say we've agreed to, and we took that trade, predicting the market will go from here to here. We took that trade. Now, what is going to happen is this. Market will move from this area to this area, doing 35 pips, right? But then, the 4 of us will do 35 pips, but the 4 of us will not make the same money. Why? So, because you're a beginner, you probably be taking it on 0.01. So what is 0.01? Those are the lot sizes. So 0.01 means that you are taking 1 cent per pip. So on your phone is different. The way it is different, but on your system, this is it. So I'm setting it at 0.01. So 0.01 means 1 cent per pip. So when market move 1 pips, I make 1 cent. When market move 10 pips, I make $1. So when market actually move 35 pips, like we saw in this our prediction, I made what? $3.05 or 50 cents. $3.50. That's what it means. Why? Because I am using 0.01. So let's not say I used 0.1 because I am now becoming a master gradually. I use 0.1. So what does 0.1 means? 0.1 says that $1 per pip. Don't forget, 0.01 is 1 cent per pip. 0.1 is $1 per pip. So $1 per pip means that when markets move 1 pip, I make $1. So when markets move 10 pips, I make $10. When market moves 35 pips, I make $35. Can you see why we cannot make the same money even if we make the same pips? It depends on our lot sizes. So lot sizes is also dependent on your account balance, your risk level, and many other things. But let me continue the explanation. So if I decide to increase this to 0. Okay, to, of course, it can vary from, I said 0.01. It can be 0.02, it can be 0.07, it can be 0.09. It simply means 9 cents per pips. So and then same thing with 0.1. It can be 0.2, 0.3, 0.5, 0.7. So it means $7 per pip. So let's now say I move to standard lots. That is 1.0. I decided to take 1.0. 1.0 means sorry for the error, is the network. So I was explaining, I explained 0.01, 0.1, and then currently talking about 1.0. So 1.0 is called the standard lot size. So standard lot size is saying that for every pips movement, for every market movement, you are making or losing $10. So if market move 1 pip, I make $10. If market move 10 pips, I make $100. If market move 35 pips, I make $350. Now the same way, if market move in my favor, I make that money. That is the same way I'm going to lose that money if market move against me. So if we say that market is going to come like this, and the market decided to go like this, and then market decided to go some 10 pips before we close our trade. So if you are on 0.01, how much would you have lost in the trade? Your account will have been $1 less. So if you are using 0.1, you will have lost $10. If you are using 1.0, you will have lost $100. So that is the way um, the lot size and the pips also work. So pips calculation, I already explained that. So let me explain the last point for tonight, which is leverage. Now, why leverage? What is the meaning of leverage? Like I already explained in the last class, you and I are called retail trader. So the big boys in the industry are called institutional trader. And those guys come with big money, billions and millions of dollars to the market. You and I don't have that money to trade with. And then until recently, it was almost impossible to trade the forex market unless you have at least $1 million. But then, now you and I can play in the market with your $10. So why do you think that is possible? It is because there's a broker that is giving you leverage. So leverage means that you have $10, but I will allow you trade as if you have $1,000. That is leverage. So if you look at your MT4 interface, especially on your mobile, you will see the kind of leverage that your account currently have. And then while opening your account, they will ask you what type of leverage do you want? Ratio 1 to 5, ratio 1 to 10, ratio 1 to 2. So what does all of those ratio means? It means that if you pick ratio 1 to 5 and your original balance is $1,000, they will give you opportunity to trade as if you are trading with $5,000. So if you have $100 in your account and your leverage is ratio 1 to 5, the trade that people that have $500 in their account can trade is what you are going to be trading. So if you have $10 in your account, you cannot take some lot size because you don't have money to even take that risk. But if you use a higher leverage, you'll be able to take that kind of trade. Now, before I stop talking about that, one thing I normally tell people is this: as a beginner, try as much as possible to avoid higher leverage so that you don't get used to it. Trade with what you currently have. So pick the lowest leverage possible and trade with what you currently have. Once you have mastered the game, you can now use any leverage you want to use. But don't get used to leverage. Don't get used to leverage. Because when you start losing money, they will remove their leverage. And you will not see your true nature. You will not see what exactly you have in the account. That is what it means. So any question on that before we finally call it a day tonight? Waiting for your questions. So are we saying there's no question? So, okay, for the leverage. So for the leverage, somebody is asking me to throw more light on leverage. I said that leverage is what make your $10 be able to take a trade that only $1,000 trader can take. So leverage is an amplifier. It amplifies your account balance. More like you borrowed money to trade. So you have $10, but they are saying they are giving you times 10 of what you have to trade with. So you have $10, but you are trading. So you are trading the trade that only a $1,000 account can take. That is what leverage means. And it's always seen in ratio. So if you go back to your broker now, you will see that you will see your leverage ratio. You will see your leverage ratio. So it's an amplifier, sort of, more like a borrowed money. It's always it is only mostly useful to people that are winning trade. That is someone that has mastered the trade. As a someone that has not mastered the trade yet, that is always losing, it will not be a good thing to use a lot of leverage. So use the least possible leverage you can have when you're starting. As time goes on, you will understand the market better and you'll be able to. If you have $1,000 in your account and trade with $100, of course you can take a trade that will not just take more than $100 in your account. Of course, that is possible. With or without leverage, that is possible. With or without leverage. But if you have leverage and you have $1,000 in your account and you still have leverage, you are going to be able to take trades that are running into 50,000. Let's say you are on a leverage of 1 ratio 5. So if you are so that means your $1,000 is now $5,000 in your account. So if you make additional money, you have the money. But then if you lose money on your $1,000, they will automatically take their original money out before you start losing their. So in short, you cannot lose the broker's money. That is the truth. Once your trade, so if you have 5,000, if you have $1,000 and there is appearing as $5,000, and you take a trade, and the trade is already eating up 995,000, of your money, you will just see that 4,000 will disappear. Why? Because you can't lose brokers' money. And that's why I tell people, you're a beginner, use the least of leverage possible, or don't over leverage your account. So take one or two trades when you are starting. You will see many people that they will have like 7 to 10 trades going on simultaneously. Yes, exactly. It's like borrowing money to trade. So you will see some people having 10 trades going on simultaneously, and that will eat into their margin level, their leverage on their account. So if you are not a master of that, if you do that and those trades go wrong, your account is going to go up in flames. That is just it. Exactly. It's like borrowing money to trade, but you cannot lose that money. Once you start losing your money to a point, they call it margin call. You will receive margin call, and all your trade will close by themselves. All your trade will close by themselves. That means your money can no longer bear the loss your account is currently experiencing. So and that's where we see your account has blown. That is, you blow the account. So as a beginner, you blow a lot of accounts just to prepare for them. And that's why we are established that you should start with a demo account so that you can blow whatever account you want to blow a demo account so that by the time you start trading a live account, you won't have to blow a lot of that before you master the game. So any other question before we peacefully call it a day tonight? So any other question? I guess there's no more question tonight. Okay, obviously I'm going to do that. I It omitted my mind. Just so somebody's asking, can I give you homework, an assignment concerning the trend line and all of that? So this is what I'm going to say. I need you to do something. I need you to open your chart and give me three different pairs. Draw a trend line on them. So pick a chart like this, draw a trend line, screenshot it, and send to my mail. I'll put the assignments properly on the WhatsApp group. So in the absence of further question, permit me to call it a day tonight. So go over everything we've done. As soon as I get to upload this video online, I'll drop the link so that we can watch and learn further. So good night and have a good night rest.